i4Homes TV presents Buying Your Dream Home Today with Kathy Nelson and Tracy Nelson. And now, Kathy and Tracy.
Happy Friday and welcome to the show. I'm Kathy.
And I'm Tracy, and we are a husband and wife real estate broker team with John L. Scott in Redmond, Washington.
And you're watching Buying Your Dream Home Today, a weekly webcast that happens every Friday at noon.
These shows are focused on getting you the information that you need in order to go out and buy that dream home with confidence.
And today's topic is, how much house can you afford?
I'm sure you'd like to afford a castle.
Not really a castle, a log cabin on this lake back here.
Oh, on that lake? The green screen lake?
The fake one.
Well, to help us with this a little bit more, today we have with us Peggy Kahler. She's branch manager with Weststar Pacific Mortgage.
Hello, Peggy.
Hi, guys. How are you?
So nice to have you on our show today.
We're doing great.
Thanks for inviting me. This is fun.
It's not like I just saw you last night.
I know. The joys of small town living.
Yes, it is.
Definitely.
So why don't you tell us a little bit about yourself?
Well, I've been in customer service for my whole entire life, and that's how I think of my mortgage career. Customer service is the number one thing. I think for most people, their biggest investment is their home, and it's the thing they spend the most money on at one time in their entire lives. And I think being able to communicate clearly with people and help guide them through that process is a very big responsibility. I've been working in mortgage since 2001, and I love it. It's super challenging, and also Tracy, do we have...
No, you're fine. You're good. You're good. Sorry.
Tracy,
Keep going. We're showing your website now.
Okay. So we have, anyway, it's a big responsibility, and I try my very best to make sure that people clearly understand what they're getting into, what's required, and that they're not overwhelmed by the amount of paperwork and excitement that goes along with that in mortgage. Because there's a lot, and the rules have changed many, many times over the past 15 years. And just keeping up with that is a full-time job.
Yeah, especially now after all the stuff that you probably went through with the down and, the down economy, and then now it's back up. And
yeah, it's there's never a time where it's not exciting. And it's an anxiety-ridden thing for people. I mean, first of all, they have to choose a home where they're going to live for a long time. And, I know that you and Tracy make that fun and a good experience for people. But at the same time, when the market was really slow, people are afraid to buy because they thought, what if it's not the bottom of the market and it continues to go down? And now that the market's on the upswing and it's very competitive, they're like, well, what if I don't get the house? And sometimes they don't get a few houses. And so it's just really sort of a high anxiety time for people, and just helping them through that process and making them come away feeling like it's all good, and that they're where they need to be and want to be, and are confident about what they're doing as they're moving through the process. I think that's our jobs, yours and mine.
Well, and it's a team effort too to get these homes nowadays with the many offers, and it helps to have a team.
It does.
So Peggy, what is the difference between a mortgage lender and a bank? Why would we go to a mortgage lender versus a bank?
Well, I've worked at both several times. I've worked at a bunch of different places over the years. As a mortgage lender, I am able to use loan programs and interest rates and money from many different banks while working at the same place. What my company does is we have what's called warehouse lines with many different banks. So we use their loan programs, but our internal underwriters underwrite their loan programs. We fund the funds with our own money. And then on the back side of the deal, we work with getting those loans over them to the other lender or to the banks to be serviced if that's the case. We're also a servicing company, and we keep many of the servicing rights, which means we're the people you pay your bill to. But just having the availability of lots of different programs from lots of different banks makes me more flexible as a lender. When I worked at just one of the big banks, like I had their programs and their rates, and that was it. So not the flexibility at all that that I was hoping to have. However, at that time, there was a lot of companies going out of business, and it was a great time to just be somewhere big that was just stable. But the experience for the customers, in my experience, was tougher at the big banks, because being a small department of a giant enterprise doesn't give the entire company the focus of making the loan experience good for people, and that was hard.
I agree on that. And you are available basically 24/7.
I am. There's no 9 to 5 in this job for me, and I find that most people don't want to talk about their personal financial information while they're at work. So a lot of times my day starts when starts more when people are getting off work, because that's when they're available to talk freely about what their goals are and their plans and their financial situation and challenges are. So for me, I always tell people, if you want to reach me, email me. I'm looking at my email all the time.
That is a really good point.
Yeah.
Well, now the kind of the topic is how much house should we afford?
We've had this asked of us a lot.
And we've been told different things in the past too. I remember long ago, my father-in-law said, "Oh, you should buy a house with what you think you're going to make in the future, because you're always, supposedly going to make more money." So, what is it today that we should be, rule of thumb that we should be using?
Well, that's a really interesting question, and it's such a personal thing to people. So each loan program has what we call debt-to-income ratios attached to it. So it's slightly different for, say, a VA loan, from an FHA loan, from a conventional loan, from a jumbo loan. Those debt to income numbers are different for each loan program. And it's such a personal thing at the same time. Because what I tell people when I'm first meeting with them is, just because I can qualify you to buy something doesn't mean that's a good idea for you to spend that much each month. Especially first-time home buyers, I like to ask them to go home and say, if they think they want to buy something that, let's just use $350,000 as a number. So what I do is I work out what that payment would be for them. We talk about what they're currently paying for rent and what that difference is, and then I ask them to go home for a couple months and just put that money aside, like they weren't going to have that money, and see how that feels. Because if you have a rent payment that's $1,200 a month and you want to have a house payment that's $2,000, that's a really big difference. So I think it's always good to practice with your payment and see how that feels for a couple of months.
Yeah, that takes discipline.
It takes discipline, and you give, and I forgot, you give a sheet to all your clients too. That's kind of like a budget sheet.
I do. I give them a budget sheet. It's interesting to me. I feel like budgeting sort of like went out of popularity somewhere. I don't know. I think our parents all told us about it. Yeah. But seems like people are not as disciplined right now about money, or just haven't learned the basics. So I have a sheet that I give people, and it just has a giant list of things that you don't think about. It's like, okay, so on an average month, you can spend this much, no problem. But what about the month where all your car tabs come due at once? Or you have student loans, or there's just things that people forget about. So it just is a giant list, and I ask them to go home and just put it in an Excel and then track what they're spending. Yeah, and they may need to add a few categories, or there may be categories that don't apply to them. But until you really see where your current money's going, it's hard to decide where you should land payment-wise. And the other thing is everybody's a little bit different. I'll give an example. My nephew bought a house, and he bought towards the high end of what he could afford, but he bought a home. He's a single young guy, knowing that he was going to have a roommate that was going to be paying half of his house payment. Now, as a lender, I can't count that money, But knowing that that was his plan and that he already had the roommate in a rental situation and they got along great,
Good idea.
I was comfortable saying to him, I think you're going to be okay at this higher payment on your higher loan to value or debt to income ratio. So, and there's different things, if a young husband and wife come in and they're both working and they say to me, we want to get settled in our first home and then we're going to start a family. My question is always, are you both going to continue to work after you start a family? Or are you going to lose a good portion of your income, and maybe that's the income we should plan on?
You're really asking the tough questions, aren't you?
I am. That's why the communication is really important, and feeling like you're comfortable and confident with the person you're working with. Because in my opinion, we have to ask some very personal questions of people. And that's not always easy, but you need them to think a little bit ahead. So, Tracy, what the advice your dad gave you was probably great at that time.
Right.
Yeah.
Is that what you guys did?
Yeah, we did. We bought, and we only had one income at that time, so we bought the teeniest house there was. Hey, but we did it. Yeah.
So that's, so there's so many factors that factor into it. And in mortgage, we look at your gross income, not your net, which always throws people off a little. And there's, I tell the old rule of thumb, there was, there's been a lot of rules over the years, don't spend more than 25% of your gross income on your house payment. And then that moved up to 28, and then it went to 32. And that's just for your house payment, which includes your homeowner's insurance, your property taxes, your principal and interest payment, as well as mortgage insurance, if that's a part of your equation. And then there's your combined debt to income, which would be any other debts as well. And that number, shouldn't never go, in my opinion, over 40 to 43%. There are loan programs that will let you go up higher than that, but that's a lot of money. Because remember, we're talking gross, not net.
Yeah.
So
you're making a big commitment.
It is a big commitment. And, people's car payments these days,
are huge.
Are huge sometimes. So, it's, sometimes it's a question of, does it make more sense to, pay off your car and put a smaller down payment even on your home, and then in order to have enough financial flexibility, then you've got a hopefully healthy car that's paid for and a house payment that you can manage.
One of the things you brought up yesterday to me, which I thought was really interesting, is the millennials that are buying their houses now. Mm-hmm. They never, they were saying that 3%, 4% interest rate are, creeping up there, and they're a little scared. But we were going over, and there's a chart that you gave us, and we'll show it in a minute, because when we bought a house, it was 10% in 86 when we bought. And when did you buy your house again? Your first one?
9, I think. And my interest rate was 10 and a quarter. But my house cost $55,000. Yeah. So that, there's that difference in there. But at the same time, percentage-wise of my income, it was still a lot.
Yes.
And I had pretty healthy income for someone my age at that time. Mm-hmm. But it was still a lot. I can remember my house payment was like $400, and I thought, how am I ever going to make that?
I know.
It's crazy now, but that's how times have changed. But interest rates now have been so low for so long that people of this generation, as interest rates are creeping into the fours, they're like, that's too high. And those of us that have watched them over the years are like, that is still historically for 40 years ridiculously low. And I can't believe that we've actually had it this low for as long as we have. So I say lock that in and write it for all it's worth. It's a great deal right now.
Yeah, it is. Now, you mentioned it a little bit just a moment ago, but let's go back to down payments. Why do I need a down payment, and why is it different with the different types of mortgage programs out there?
Well, why is above my pay grade. I don't get to create those programs. They just are there for us to use. A lot of the government programs are lower down payment. It's to help people get into homes. They're really, generally speaking, loans that aren't meant to be kept for a really long time. They would like you to refinance them out of them at some point, even if you keep the home. But let's just say, like, take a VA loan, for example, which is a Veterans Administration loan that's only available to people that have served our country. That's a zero down loan program. It has great interest rates. It has some pretty flexible terms. And, you know, in my opinion, people that served our country deserve that at the very least. They should not have to save a giant down payment for their house. They've already given us a giant down payment of their lives.
Oh, absolutely.
Yeah, that's nice. Yes.
Yeah. And then the FHA program, which is through the Federal Housing Administration.
Seems to be pretty popular too.
Well, it is, because so when I had to save a down payment for my $55,000 house, and had to save 20% of it, really, you know, it wasn't that much money. You know, that's
yeah, back then.
You can say that now.
not that. So now that would be not even the 3.5% down that one would need for an FHA loan. So that the lower down payment loans are just straight up easier to get in and manage. And because they're government-backed programs, for the most part, the interest rates are also real low on them. The difference with those is that they have mortgage insurance. And mortgage insurance is insurance paid by the home borrower to ensure that if they default on the loan, that the mortgage company makes their money back. So that's what it insures. It insures the mortgage company. It doesn't insure the borrower. So it's kind of throwaway money. But the idea is you get into a home and the market continues to move up. You build equity in that home, and then you can refinance into a loan that doesn't require mortgage insurance. To not carry mortgage insurance of some form, you always have to put down at least 20%. And usually you do that in your move-up house. That's what we see more, is that we do the lower down payment loans for the people that are the first-time buyers that need to get in their home. Once their houses have appreciated and have 20% equity, then they can sell that home and go buy a bigger home. Woohoo!
Woohoo! Yeah, with us.
That's the American way.
Yeah.
That's right. That's how we do it.
That's how we did it.
Yep.
So what do you have over there? It's
This is this historical graph that she gave me that shows the many years of interest rates and how they've been really up. See, in 1992, the interest rate was what? Let's see, 15-year was 9%, 30 was 9.5%, and let's see, when we bought it, like I said, in '86, we bought our first home. It was almost 11%.
Yeah, isn't that hard to imagine?
It really is, but like you said, we only were. I think our first home was what, 60,000.
62.5.
Yeah, 62.5.
I know. So, you know, people pay that for a car now without that.
I know.
Right?
Can you imagine a car?
Yeah, our houses cost what people's back then what cars cost now. So everything's a tiny bit relative, but basically what's going on now is the money's, you know, so inexpensive that the government's not making any money. Yeah. You know, in the big wheel of money scheme that the world runs on, you know, their interest rates are so low. There's no inflation involved. So it's been interesting to watch, because every time interest rates have started to tick up, getting closer to 5, sort of everything's sort of just like shut down.
Yeah,
because people are like, just like that. Like, oh my goodness, it's almost 5. Well, that's a big interest rate. I'm not going to do that. And it's so funny, because historically I'm looking back and going, no, that's still practically free money compared to, you know, some of the things that we've seen happen. But it needs to tick up in order for our economy to stabilize more. So, it's sort of an interesting conundrum, and I'm glad I'm not in charge of all that.
Oh, come on, Peggy. I wish you were.
I know, right? Oh, it'd be super fun if I was in charge.
Well, I think we're just about out of time.
Yeah, why don't you tell everybody where they can find you and contact you?
Oh, thanks. Well, my office is located in Duval, Washington, but my company is actually large. People think I'm just like this little sole branch, but we're in 38 states. You can contact me on my cell phone anytime at 206-947-0615. My website is my name, PeggyKahler.com. or you can also find it at pkhomeloans.com. And my email is pkahler, my last name, at westloan.com. So pkahler at westloan.com. And I'd love to hear from anyone, even if you just have questions.
That's nice. And yes, you're super with customer service too. So
Oh, thank you, Kathy.
and thank you for being on our show.
Thanks for asking me. This is really fun.
I know it is. I love
thanks,
it.
Peggy.
Yeah, you're welcome, Tracy. Great to see you guys.
You too. Bye-bye.
So hopefully this helps you understand a little more in getting that home loan for that beautiful Lakeview house that you're going to buy this weekend.
I like the one we have behind us. It was $10. $1
$12.
million view for $12.
$12. So you guys, everybody have a great weekend. Check out, talking about buying our first house, check out casanelson.com and you'll see the whole history of how we got our houses and made fun little families,
American dream.
Yeah, the American dream.
Our American dream.
Check out casanelson.com and we will see you next Friday.
Have a great weekend. Bye-bye.